Welcome to class 9 of Indian financial system. Already in the last classes we were discussing about financial markets, so which consist of money market and capital market, the main two classifications. So we have already dealt with money market and the half part of capital market, so which is the functions of capital market we have already dealt in the last class. And in this class, we are going to study regarding the types of capital markets. So, capital markets are classified into two categories. So, like or major markets, primary market and secondary market. So, first is your primary market. What is primary market? Primary, which means first, right? The market in which securities are issued for the very first time to the investors, we call it as primary market or the new issue market. So the main role of primary market is capital formation. What company does? The company is going to raise the capital by issuing securities. So securities such as your shares or bonds in the primary market. So the investors who invest in new issue of the company, so they become the shareholders of the company. In primary market, what happens? The transactions that are there, so they directly take place between the company and the investors. So the money invested by the investors in the primary market directly goes to the company. A company can raise fund from the primary market through the various methods. So like your public issue, private placement, right issue, etc. So what is this public issue? Public issue is nothing but you are going to issue the shares to the public, or we can say initial public offering. Initial public offering means initial, for the first time company is offering its shares to the public. So public issue or initial public offering is the process of issuing share to the public for the first time. The next is private placement. What is this private placement? Private placement is offering of shares to the few selected investors. Okay, so these selected investors could be mutual funds, venture capital, banks, insurance companies, etc. The next comes your right issue. So right issue is nothing but offering a right or rights offer in a way through which the listed company raises capital by offering shares to the existing shareholders. So for example, XYZ company comes out with 1:2 right issue. So this means that XYZ shareholders can buy an extra shares for every 2 shares they have. So usually the stock issued in the form of right issue and lower priced than prevailing market price of the share. So then comes your secondary market. So what is this secondary market? So trading of previous securities. Primary market means for the first time. But here we are going to deal with the existing shares. Okay. Trading of previously issued securities takes place in the secondary market. So now, if you are going to apply for the shares in the primary market, so for example 10 shares are issued, 100 people have applied for that. It doesn't mean that all those who have applied for the share they are going to get it. So only 10 people are going to get it, or 10 shares will be given and rest 90 people will remain. Okay, if a person takes 1 share each. So now these shareholders who did not get the share in the primary market, they have the right to participate in the secondary market. So they can buy the company's same share or share of the same company which they were interested to buy in the secondary market. So which means the one who have purchased in the primary market, they are going to sell it in the secondary market. So we also call it as aftermarket. Okay, so aftermarket because it comes after the primary market, right? So secondary market, trading of previously issued securities takes place in secondary market, and investors directly buy the shares from the seller. So who are the sellers now? The one who have purchased the shares in the primary market are the sellers in the secondary market. The secondary market has a huge volume and a magnitude of transaction that affect the primary market. Secondary market includes both stock exchanges and over the counter market. Some of the popular stocks like stock exchanges, so we can say Bombay Stock Exchange is there, okay, National Stock Exchange is there, okay, suppose it is a New York Stock Exchange, NYXE, so London Stock Exchange, LXE. So these are some popular stock exchanges. So there are two types of secondary market. So like they are the over the counter market and the dealer market. Over the counter market, over the counter or off exchange trading is from the decentralized trading of securities. Trading of securities takes place directly between the parties. The buyer and the seller openly announce the prices at which they are willing to sell or buy securities. So it is less transparent than exchanges. So in the dealer market, the buyer and the seller do not gather at a common place physically. The broker and the dealer act as an intermediary between the buyer and seller. A lot of dealers exist in this market, therefore due to competition dealers offer the best price to the investors. So this is about your classifications and types of what? Types of capital market. Okay, thank you.